Nilesh, good morning. First reaction on Infosys numbers and the management commentary.
Good morning, Pankaj. I think the first quarter numbers are definitely below expectations. They are disappointing in the light of the guidance which they had given for the full year. So I clearly, if both CS as well as Infosys, definitely do not find an earnings season for the sector, and I think it reflects the sluggishness which is there in the global technology space.
Right. So, if we look at Infosys, 13% would be the estimate for this entire revenue, of course, before the numbers today. And for TCS, about 11%. So, Q1 generally sees a majority of growth coming in or majority of the growth numbers coming in. With this number coming that low for both the companies, you expect it to get revised sub 10%?
Hello.
Nilesh, do you expect the guidance to get revised by less than 10%?
I believe that would be unlikely, given the fact that the full year guidance has got revised downwards already to 10.5% to 12%. So it's very unlikely that the guidance will be lowered further, even from these levels, given that, this time around, the revision of the guidance happened around already a week around a week quarter, as well as the fact that, events like Brexit have happened. The Eurozone continues to be weak. The global economy continues to kind of have an anemic growth. So I think the management would have factored in all these and then revised downwards the guidance. So I would actually be very surprised if the earnings guidance would be revised further downward from here, these levels, or that the final growth number for the year would be lower versus 11 to 12%. So I probably believe that for the full year, the dollar revenue growth should be around 11 to 12%, and the rupee growth probably should be around the 14 to 15% band, which I don't think is pretty bad in this kind of an environment where earnings growth anyway is weak. So I think finally for the full year, Infosys will end up with around 14 to 15% growth in rupee terms.
Right. If we just look at the markets after Brexit, it has done very, very well. High beta has gone up. But do you think companies like Infosys, TCS, or the entire tech space, which has a lot of, exposure over there, would see impact of Brexit on their numbers going ahead, and at least in FY17?
There would surely be some impact, and I probably believe that would be a lot more to do with sentiment and a bit of the uncertainty which gets created due to event like Brexit. But given that, these companies have limited exposure coming in from UK, our sense is that the impact would not be very significant. I think the real challenge is the kind of weakness which is there in spending in the legacy space on the technology front. And the real big opportunity is from the movement from the legacy space to the digital space. That's really where the big opportunity is. And that's where Indian technology companies are tuning their business models and their delivery services. And therefore, there's a transition process which is involved. But having said that, I think in the global context, as well as in the overall economic earnings scenario, a growth rate of about 12 to 15%, I still think is reasonably good, given the kind of challenging environment that, most economies and most companies are facing.
Right. So, Nilesh, one was, of course, about IT. But second is, are you surprised by the recent market move that we have seen, not only here in India, but global asset prices? Any negative news globally is, just being ignored and markets are going up?
Yes. Clearly, the up move that we have seen over the last few months is primarily driven by global liquidity, given that bond yields in some of the developed economies are at negative levels. So clearly there is a move of liquidity to asset classes where there are growth prospects or where there are upside, and therefore we've seen uptick in both equity markets as well as in global commodities, which means there is a higher movement towards risk. And that really explains the up move in the markets. However, having said that, if there is any global event which ends up being negative, I'm not too sure how resilient markets will be, especially at these elevated levels.
Right. But, at this point of time, fresh buying, at least at index level, should be avoided because the returns may be back-ended and it should be a very, very stock-specific approach. That should be the strategy.
Oh, yeah, I think at any point of time, the approach should be bottom-up. It should be based on fundamentals, and it should be based on what is the intrinsic value that you see in a company over the medium to long term. That should essentially be the strategy. Clearly, we believe that in the short term, the beta strategy could still play out, but that's something which is not going to sustain for extended period of time. And at elevated levels of some of these risk assets, clearly, if there were to be now a negative event, I'm not too sure whether markets would be resilient to such an event. And in that environment, you see the beta play also turn on the negative side. So clearly, I think investors need to be very careful, need to cherry pick their stock positions and have a medium to long-term perspective rather than kind of get into a crowded space or a crowded trade and later on pay the price for, just kind of jumping in and putting money to work what is working in the short term but may not be very meaningful from a medium to long term.
Right. Just a word on the mid-cap space as well and the resilience and the strength over there. You think there are still a lot of mid-cap companies which may grow even if there is a risk off, even if, the Indian GDP doesn't grow the way it has? So that's a space that you would continue to look at?
Well, the mid-cap space is a very large universe. It runs into hundreds of companies and maybe a few thousand companies. So to that extent, the mid-cap space always is a very interesting space. And I think one has to kind of really focus on those kind of companies, even within the mid-cap space, which have a niche, which have a solid management and don't have a leveraged balance sheet, and are entering into an up cycle based on their own strength. So clearly, it's definitely from a volatility point of view, mid-caps are more volatile. But I think if you kind of have a 2 to 3 year horizon and are very careful in picking your stocks, it definitely ends up being a very rewarding strategy. And if there could be any kind of a downtick in the marketplace, mid caps could kind of have too of a downtick, but that should be used as an opportunity to load up on that.
Right, Nilesh. Thank you so much for joining us here this morning. Hope to see you again.